Subscribe to the channel and press the bell icon to never miss any updates. Hey everyone, this is Anujvohra here, and in this video I am going to talk about, I am answering one question which was asked to me in Quora. So if you haven't followed me on Quora, feel free to follow. So the question over here is that the person who is 40 years old and who has 1 crore rupees to invest, and the question was that how to invest 1 crore rupees to get maximum return. So basically, if we talk about answer, it is divided in two separate categories. The first one is we will consider the conservative approach for investing, and the second is slightly aggressive, not that much aggressive, but slightly aggressive approach for investment. So if we talk about the first approach, I'm assuming that the person will retire at the age of 60. So we have 20 years of investment period. So for that, after 20 years, the that particular person will consider withdrawing or selling the portfolio. So for that, the conservative approach of investment will be to invest in index funds. It's that simple. If the person would consider investing in index funds, let's say 1 crore rupees in index funds, and if we expect that in the next 20 years he will get 11% return, which is decent return compared to the Indian stock market. So at 11% return, if we consider 20 years of investment period, he will get 8.9 crore rupees after 20 years. So it was a conservative approach. So if you take more risk, then there are chances that you will get massive amount of returns as well. So therefore, we are now going to talk about slightly aggressive approach. It's not fully aggressive approach, but we can say it is slightly aggressive approach. So in this approach, we can directly invest in stocks like blue chip companies. If we consider 10 to 15 companies for investment, and if we buy stocks for these companies, and I'm not talking about small or mid-sized companies, I'm talking about blue chip companies where the fundamentals are good, the companies are delivering good amount of returns for a long time, and that is why it can be a good investment for that particular person as well. So if we consider 20 years of investment period, and if we invest in these companies and we assume that these companies will deliver 16% return over the period of 20 years, the amount will be massive. It will be 24 crores. 1 crore of investment will turn into 24 crores in 20 years. If you consider investing in stocks, which is slightly aggressive approach. I'm saying slightly aggressive approach because you are investing in blue chip stocks. If you would have invested in mid cap and small companies, I would call it very aggressive approach. But as here we are investing in blue chip companies, we call it slightly aggressive approach. And if we talk about index funds, in index funds you will get 30, 40 and 50 companies where you will get a lot of diversification. So because of that, you will get 11% return. But here you are only focusing on 10 to 15 companies, and therefore you can expect that in the long run, in the 20 years of investment period, you can get 16% returns as well. And you can clearly see that if you would have invested 1 crore rupees in index funds, you will get 8.9 crore after 20 years of investment period. And if you have invested in this way, like slightly aggressive approach in blue chip stocks, 10 to 15 companies, you can expect that you will get 16% return as well, and you will get 24 crore rupees. So this is how you can divide your financial plan. This is how you can think based on your own risk taking ability. If you want to go with conservative approach, it's a good approach as well. It's not like good or bad. It's like the two different things. It's like two different ways of thinking. So this is what one should think before investing the large amount. It is very much essential to plan properly because the amount is big. You need to be really careful before investing. You need to plan that you don't need that particular amount for at least 5 years, 10 years, and even 20 years of investment period. Here I consider 20 years of investment period because my plan, I thought that the person may be planning for the retirement. So this is how you should think. And if you like this video, do consider hit the like button, share your thoughts in the comment section below, and do not forget to subscribe to the channel as well.